one example, just shortly explain the whole table, like how
Okay,
these three
just understand. If you understand the outflow or inflow, you can easily guess whether it is debited or credited. It's very nice.
Yeah.
Easy. Let me just explain to you. Can you see a whiteboard here?
No.
Yes.
Yeah.
Oh, I can see now.
Okay. So if this is US and this is Germany, what is cash inflow?
When money come into one country.
When US receive money in the form of, because you are in US, you need dollars.
Dollars.
If dollars
Yeah.
are coming into US, it means cash inflow. What is cash outflow?
When dollars leave USA.
When dollars leave USA, but dollars will leave here, there will be converted into euro. Understand? It means there would be some kind of financial market is there, or forex market, right? We call this outflow. If a country inflow is coming, it means if we talk about the income, if income is coming into the country, credit. If it is going out, if US, now you can derive the scenarios. If US person invest or US government invest, or you can say purchase the shares in Germany, it received dividend or it paid dividend?
Outflow. So it's
they received dividends.
If US government purchase stocks, they receive dividend or they pay dividend?
They receive.
Dividends they receive, of course.
Yeah, dividend, not the payment. I'm not talking about the payment. I'm talking about the income. Income is always on investments, right? So dividend, or if the US government give loan to Germans, German will pay the interest. So US will pay interest or US will receive interest?
They will receive. The USA is
It
going
will
to
be
receive.
credited. Understand? Or what if the
Because
Germans
they're receiving?
give US loans and US need to pay interest, not receive interest? When they pay interest, it is debit. Now you can just read out this income transaction part. Now you will understand better.
Oh, okay. Okay, guys.
Okay, I'm just go through with this other groups. Okay, you just keep discussing.
Okay. Guys, can you check me? So I'm not looking at the right two columns. I'm looking right now at international income transaction, sentence 3. A Mexican company that borrowed dollars from a bank.
What are you gonna have? Okay.
21. Okay, we're back.
Hello, group 2. So anything you want me to explain?
Yep.
Or it's pretty
Yes.
easy?
Yeah, I just wanted to explain you to explain the credit debit part for the balance of payments account.
Okay. I got it.
Because I remember in accounting last semester what we discussed under debit and credit, but here I'm just wondering under which category it falls under.
Okay, just it's the same concept going to be applied here. So if asset rises,
yes,
it is
with debit.
If asset decrease, credit. If liability increase, credit. If liability decrease, debit. If shareholder equity increase, credit. Decrease, debit. Expense increase, debit. Income increase, credit. Income decrease, debit. Understand the opposite of income increase. Income normally don't decrease because income is income. or loss
Right.
is credited. Okay. So
Yes.
I'm just gonna give you the example which I already gave the group 1. That is US, and this is Germany. Can you see the whiteboard?
Yes.
Yeah.
Yes.
Let's talk about the form of inflow and outflow. What is cash inflow? So remember, if you are doing this kind of questions, first of all, you have to understand either you are in Germany or you are in US. So the easy part is that because this book is US centric, so you consider yourself, if question is silent, then consider yourself that you are in US. So what is inflow for US? If money is coming
In.
in the form of, because
Dollars.
US, their currency is dollar,
Dollars.
and German currency is euro. It means in between there is some kind of forex, right? And what is outflow?
Dollars
Money.
coming out of US.
That goes out.
Do we think outflow with respect to Germany? No, we are here in US. So outflow for US is the dollars are going out. And again, there is here forex. But when it reaches to Germany, it will be converted into euros, right? And now you can think in terms of outflow and inflow, and then you can derive whether this is debited or just should be credited. First of all, the nature here, or if the nature is what kind of income, let's talk about the income. US invested in German stock exchange, so it will receive dividend or pay dividend.
Pay.
Think about that. US invest in Germany, so US will receive dividend or US will pay dividend?
Receive.
Good. Michael, it's receive dividend, not pay dividend. You
It's
invest,
investing, right?
you receive dividend, okay?
Okay, got it.
Understand? Or if
Right.
US give loan to Germany, US receive interest payments. That's going to be interest income, okay? Not interest payment. Understand? So when US invest in German stock exchange, for US it is when dividend come, it would be inflow, right? When interest come, it is inflow. But what if US asks loan from Germany? It means Germany gave you the loan and you pay back interest to Germans. Then we call this interest
Payment.
payment, and that would be outflow. So outflow, it means interest payments will be debited, income will be credited. Now you get it?
Yes.
Similarly with expense, if expense rises, debited. If expense increases or income rises, credited. So any transaction here in this exhibit, if you want to, if you want me to explain, I will explain. But if you understand the cash outflow, inflow, then it is pretty clear.
Yeah, I don't have any questions.
Okay, let me just go to the other group and explain. Okay, you keep discussing, and then at the end, I'm going to close all the rooms.
Okay.
Okay, guys, do you understand all the exhibits?
Yes.
Any transaction you want me to explain?
No, it's mostly understood.
Can I ask a a question if I got it right. So pretty much I was thinking when do we have like cash outflow, this is considered as an expense, and that's why we debit because it's increasing, right?
Increasing.
Yes, like that's how I'm like explaining to myself. Cash outflow pretty much can be considered as an expense, like money that leave the business. And when we have an expense, pretty much if it's going up, we debit.
Good. It is accounting
And-
concept, right? If expense rises, debit.
Debit, yes.
If income
Because that's
rises,
what sorry?
if income rises,
Credit.
That's what was confusing me. And if we have inflow is considered as sales. I mean, from the
Okay.
accounting point of
think-
view.
let me explain it. Can you see a whiteboard here?
Yeah, not yes, I can see now. Yes.
Okay.
Yes.
So this is the same example that I gave the other groups. So if you understand, inflow means, if we talk about, now we have to talk about the reference. Reference is income.
Yes.
Okay, so let's talk about that. Okay, so in these kind of questions, you need to mark your reference where you are, right? So this book is basically US-centric, right? So if question is silent, then consider that the investor or you are in US. Understand? So for you, what is inflow? If money coming into US, we call this inflow. So German money is euro and US money is dollar. It means here there is some kind of forex market who converts euro into dollar, right? And what is outflow?
From
When-
USA to Germany.
When dollars
Spending
are
money.
going out from US but receive in Germany as euro.
Euros.
This all outflow and inflow is with your reference where you are. Okay, if you are in US, then inflow is different. If you are in Germany, it is different. US inflow would be German's outflow. Okay,
Yeah.
understand this? Okay, so now let's talk about inflow example. Our reference point is income. Okay, so if US invest in Germany, so tell me, US invest in German stock exchange, so would it receive dividend or pay dividend?
Receive.
Okay, it means US will receive dividend, right? So it would be inflow,
Inflow.
right? It means income coming into US. Understand?
Yes.
And what would be the transaction? Credit.
Like, sorry, sir. I'm having a question. For
Yeah.
suppose, like in the case you said, US invest in Germany in dividends, and they will receive the dividend, but it's on credit because they have to take times to like exchange the money, right? Like transferring the money or so, right?
Of course, there's first, for example, they invest $1 million. First, the money will arrive in Germany. First, it is outflow. That is investment. We are talking about income. It means time has passed. Now the German stock exchange announces dividend. Companies announce dividend, and now dividend is paid back to